The federal government is revising Stage 3 tax cuts in an attempt to deliver relief to more people from July. The original plan, introduced by the Coalition in 2019, was designed to help counter bracket creep. Now, bracket creep happens when workers begin to earn more money and start to creep up into higher tax brackets, meaning they end up paying a bigger proportion of their income in tax. Not everyone is taxed at the same rate. Australia has a progressive personal income tax system. Basically, that means the more you earn, the more you have to pay in tax, up to a point. The government's revised plan keeps a 5-tiered bracket system. The tax-free threshold stays at $18,200, meaning you pay no tax up to that point. People earning up to $45,000 will pay 16 cents for each dollar they earn above that threshold. A salary of between $45,000 to $135,000 will pay a marginal tax rate of 30%. The 37% bracket is maintained for earners of $135,000 through to $190,000. And anyone earning more than $190,000 will pay more than $51,000 in tax, as well as 45 cents for each dollar above $190,000. So, if someone is earning $45,000 and they get a $5,000 pay rise, they'd be earning $50,000 but paying the same rate of tax on that extra $5,000 as someone earning more than double their wage. So, percentage-wise, more of their salary is taxed. But according to Treasury analysis, the reduction of the first tax rate to 16% will mean smaller increases in average tax rates for low to middle income earning groups over the next decade. A no change scenario is displayed in blue. The original Stage 3 appears in yellow, and the pink shows the rises for the various groups with this redesign. The Treasury modelling shows average tax rates for higher income earners is also lower compared to no change, but by less than under the first Stage 3 plan.
There is more than one way to return bracket creep. Our plan is relief and reform. It's cost of living relief, and it's also important tax reform to improve and strengthen the tax system into the future. By dropping 2 rates and by lifting 2 thresholds, we are giving everyone a tax cut. We're delivering $359 billion worth of tax relief, and we are returning bracket creep where we can do the most good, which is Middle Australia.
Now, the average tax rate will go down from 25.5% this year to 23.9% next year. Tax thresholds aren't linked to inflation, and the more people pay from bracket creep increases the government's bottom line. The opposition says more people will ultimately lose out.
Over the course of the next 10 years, the government will actually increase their tax take by $28 billion because of bracket creep. And everybody knows that as you work harder, you work longer, the longer you're in the workforce, the older you get, promotions at work, etc. As you work your way up through the income levels, you are paying more and more, and the tax department is collecting more and more because of bracket creep.
Some economists and independent politicians say the reworked plan is a missed opportunity for long-term reform to the nation's tax system.
The government's opened the can of worms on tax. And so we can either spend the next, 18 months only talking about this tax change, or we can say, look, guys, no one's going to trust Labor to say they won't touch tax again if it goes to the next election. They might as well use this opportunity to have that broader conversation and take something meaningful to the electorate that both, deals with the short-term pain, but actually sets up Australia for the future, as should the Coalition.